Hello traders and welcome to ChrisFX. Today I'm gonna take you through a strategy which takes place only on the 1 minute time frame, and it is suitable for all of you who want to engage into scalping. Now, I wanted to make this strategy for a while now, but I think that this is the most appropriate time. After I entered a short right here and I lost this trade, I will show you that just by following this strategy, you could have prevented this loss, let's say. Of course, you would be having other losses that my strategy doesn't have, but you get the point that with the strategy that I'm gonna show you, where you're using only the 1 minute time frame, you will be able to get a statistical advantage in the markets. Let's begin with the strategy and I'm gonna show you how it works. And very quickly, as I'm drawing what I'm drawing right here, if you want to get the best out of your trading education, then you can choose any of my exceptional services. And here I am, I have almost, let's say, drawn what I want to draw. Well, this is quite good if I extend this over here and if I create an area to the past, which is something like that. So, how does this strategy work? We are only on the 1 minute time frame. Okay, 1 minute time frame, this is right here. I'm gonna show you how it works and then we're gonna move on to the charts with real examples. So, what you will be doing, you will be waiting on the 1 minute time frame to see one or more very impulsive candlesticks. In this occasion right here, in this example, towards the downside, but of course it can be also towards the upside if we are aiming to sell. In this occasion, we are seeing our impulsive candlesticks, let's say, towards the downside. And actually this is a part that I don't need at all right here, so I think this is enough. So let's suppose that we are having, let's do something like that. Let's suppose that this movement is a bunch of very impulsive bearish candlesticks. It could be just one very impulsive candlestick. This could also do that. There could also be multiple candlesticks as I have drawn right here. It is the very same thing. Now, why does this work? There is a premise behind this thing, and these are unique strategies that I'm giving you for free right here. The reason why this is working when you see very impulsive candlesticks is because scalpers and many other traders have the so-called fear of missing out. So they are very afraid that they're gonna be missing their move, so they're entering shorts all the way over here. So what is price doing now? When price is giving you the very impulsive candlesticks, it is manipulating all of those traders into entering shorts. Now, what you will be doing, you will be checking out of points of liquidity to your left, okay, when you see those impulsive candlesticks, and when you see the first bullish retracement, so let's say that the first bullish candlestick appears exactly right here, and I'm gonna do that a bullish candlestick after those bearish candlesticks have taken place. Let's do that. Let's suppose that we are exactly right here on our movement. Then you will check out to your left. This might be instantly to your left, so this movement could have been something like that. So you would be looking to your left, or if it is all the way back in time, you will again check out to your left and you will check out to see if there is a fair value gap. If price has tapped onto a fair value gap and it is reacting instantly after this extremely huge bearish action, then you can feel free to take your trade instantly with a market execution and you can target points of liquidity such as this one right here, okay, and let your trade play out, then win the trade hopefully, and then be happy. Okay, so this is the premise, this is the whole premise, and this is how this is supposed to work. This is something that happened today. So if I go down to the 1 minute time frame, this is exactly what happened right here. You could have had 2 wins, but after our entry was somewhere around here from the 5 minute and I had my stop loss right above this area. I wasn't stopped out over here. We retraced, actually my entry was all the way down here from the 5 minute, we retraced aggressively back. I was very happy that we were gonna now win the trade with the bias that I had from the larger time frames, but look at that. One, we grabbed liquidity. Number two, if I take this area right here and I extend it all the way to the left after the grab of liquidity, actually if I even narrow it down to this area, do we tap on an FVG? Yes, we do. On an FVG of the 1 minute, I see there is an FVG. If I narrow that down and I move on to the right instantly now, you will see that we tapped on this FVG quite perfectly. So, you could be taking your trade after this candlestick has closed, right here, with a stop loss right below the area, and you could target points of liquidity such as this area of liquidity right here, or as you see, price even went all the way up here and grabbed this liquidity for a 5.6 to 1 reward to risk, which is absolutely fantastic actually. So 3 things you need to see, all on the 1 minute time frame. One of those things is an impulsive move towards the downside or towards the upside if we are interested to sell. But now towards the downside because we are interested to buy. Since we are moving very impulsively towards the downside, check out if we grab some liquidity. The liquidity could be instantly to your left or all the way back, as in this occasion right here. When you see your first, in this occasion, bullish candlestick, in the other occasion where we would like to sell, it would be a bearish candlestick, then go ahead and check out, extend this area to the left and check out if this corresponds to a fair value gap of the 1 minute time frame. In this occasion, you see perfectly fine, we did tap on an FVG. So we are following a perspective of thought which is going backwards. So we are not identifying all of those fair value gaps, we extend them to the right and we wait for a reaction. We are waiting to see what I told you, and then when we see the reaction, we go to the left and we say, do we have a fair value gap? If yes, after we had an impulsive move, such as this move right here, you see all of those impulsive candlesticks, and after we grabbed liquidity right here, after we reacted from an FVG as we saw, and then we printed a bullish candlestick, we can take our trade with a stop loss right below this fair value gap, let's say right here, and take profit on points of liquidity such as this area of liquidity or this area or those highs which are more significant. Now, in this occasion right here, as we are right here on price action, and as price action is playing out, am I gonna say the very same thing? Well, no. First of all, I didn't have many impulsive candlesticks, but if I am to say that those are extremely impulsive, let's say that those are impulsive candlesticks, even though when I'm referring to something like that, I'm referring to continuous impulsive candlesticks and then another candlestick being printed, and then you can see in this occasion we have had the very same thing again. Very impulsive bearish candlesticks right here, grab of liquidity exactly right here and right here, and when we print the first bullish candlestick, we say, what do we have to the left? If I extend this whole area, did we react from an FVG? Yes, there is an FVG exactly right here. And of course, we wicked this FVG, but we closed within its range. So a second trade in this occasion could have gone exactly right here. Now, and you see this would be a really spectacular trade, actually, an extremely high accuracy trade. Okay, now in this occasion, in real life, as we are right here, even though we don't have such impulsive candlesticks, let's consider those candlesticks right here to be very impulsive. Would I consider going short here? No, because we might fulfill the situation of very impulsive candlesticks, even though they are not, but let's say that they are. We might fulfill the fact that if I extend that to the left, we probably, broke above this, actually this area, sorry. We broke above a swing high, so we grabbed liquidity, but if I extend that all the way to the left, do we have an FVG? We don't have an FVG of the 1 minute that we are testing. We have an order block, of course, but we need to have an FVG as well in this occasion. So you will not be entering a short right here, even though of course we understand that this might as well work. Let me show you some more examples, and then I want you to go to my other channel, which you can find by clicking on the top right of your screen right now, or you can find the links down in the description. My other channel is the SMC Trader, and I'm gonna show you even more examples on this spectacular strategy. So if I move now to the past, let's go ahead and show this example now. I will show you how this example is quite good. Okay, actually there is a bunch of examples. Let's show those examples as I see them right here. We don't have what we want to have. I said the candlestick can be one candlestick. This was the example that I wanted to show you. Very impulsive candlestick, or at least one very impulsive, or even more. Okay, instantly in this occasion, as the other candlestick is being printed bullish, as you can see right here, you will say, did I grab liquidity on the 1 minute time frame? Yes, I did. And actually, I did grab a bunch of liquidity. Also this area and even this area right here. And then you say, now that I saw, you have to do that very quickly. 15 seconds before this candlestick is being finished, this bullish candlestick. You say, if I take this bottom area and I extend that to the right, let me delete this one, please. Okay, I take this area and extend that to the right. Is there an FVG? And I can narrow it down to this area right here. Yes, I am testing this remaining part of this FVG. Very nice, then you say. I can take the trade as it is with a stop loss right below this FVG. You can do it very tight if you want. Of course, this is 1 pip. This is a scalping strategy nonetheless. Okay, and I can go ahead and target points of liquidity. Now with the very same way, I'm gonna show you how we can enter again. So let's move forward, and okay, this would have been an extremely nice trade as well. Of course, 1 pip stop loss, I don't like going for those trades, but here guys, look at that. What do you have? Very impulsive bullish candlesticks. Okay, do I grab liquidity anywhere? Yes, I grab this liquidity. When I see this bearish candlestick being printed, I just take this area and extend this to the left. Did I tap on a fair value gap of the 1 minute? Yes, I did. This one. You can take the trade. Here. Stop loss above the high of the area. It would be right above the FVG, but the highest point is this high. Let me do that. Okay. Let's suppose that this is the stop loss. Very small stop loss. This is a scalping strategy. You can go ahead and hit this area or all the way down here. It depends on what you want to do. This would have been a loss as an example. Look, because this is a scalping strategy, guys, if I keep playing this out, you will see that you will be having losses, and probably you will be having lots of losses, but when you win, you will be winning huge. Now, you might say here you want to place your stop loss above this area. Then you are leaving from the scalping perspective and you are going a little bit more to the intraday trading. Okay, if you want to scalp, you have to keep the stop losses small and you have to keep following the strategy as I'm showing, because in this occasion you might be winning if you do that. Okay, you might be winning a 2-to-1 reward to risk until here, but if you keep following this thing and not the thing that I just taught you, here where you would be having, let's say, a 10.9-to-1 reward to risk, if you would place your stop loss all the way down there, you would be having a 4-to-1 reward to risk. So still it is worth doing what I said, to place your stop loss very tight right here, because you would be losing this one up here, but this one would have made way more than winning both of those trades. Of course, you will be having more commissions. And the story keeps playing as I showed you. So, in this occasion, you saw this trade right here, and even this one, no, this one wouldn't qualify. Why wouldn't this qualify? Because yes, we had impulsive candlesticks towards the downside, exactly right here, guys, okay? We had those impulsive candlesticks, we check to the left and we see that we grabbed liquidity. If I extend that to the right, we grabbed liquidity, but if I take this lowest point now and extend that to the left, all the way to the left, did we have a fair value gap of the 1 minute? No, we didn't. So you do not take this trade. Even though this one would be working until here, you cannot take this trade. But here, you grab this liquidity, and if I extend that to the left, you also tap on a 1 minute FVG. Beautiful. Here is your trade, guys. Stop loss right below the area. First take profit can go here, or whatever you want to target. It is absolutely up to you what you want to be targeting. And you see, probably we have the very same thing later on, right here. Yep, you see, again and again and again, you can scalp this thing, because here again you have the very same thing as I taught that to you. And the stop loss would go below the lowest point in this occasion here, 1.2 pip stop loss. And of course, if you extend those trades all the way up here, this would be a 5.6 to 1 and this a 15 to 1 reward to risk. And if I go to a higher time frame, just to save us some time, and I play this out, you see that by scalping, just by scalping, we could be having extreme wins. If we would just keep following this strategy, Monday to day, we would be having extremely high wins. Okay, so here we would be having that. Let's suppose that we would be taking those liquidities all the way up here, and 9 to 1, we would be having a loss up here. So this would have been a loss, a 9 to 1, and then we would have a 5.6 to 1 and a 15 to 1. So just one day, and let's calculate exactly from here until here, it would have been 4 hours and 36 minutes. You would be having a total of 30 to 1, 30%. In other words, of course, it is not suggested that you risk 1% in this. For this strategy, you can do whatever you want, but I'm not risking such high amounts if I'm engaging into scalping. Now, as price action is playing out, if we move aggressively towards the upside, not just like that, we need to see an aggressive candlestick being printed, or more than one candlesticks, and we grab this liquidity and we start retracing. I'm gonna take this area and I'm gonna move it to the left, and I will see if there is a 1 minute FVG. It could also be this area right here. This would be an area as well. Then if I print a bearish candlestick, I am willing to short this. Okay, so just by following price action on the 1 minute time frame, you can make lots of profits. Go ahead and subscribe to the Signal service, to the Academy, or in the one-on-one mentoring, where I will teach you the best trading strategies out there, and I will also teach you things about trading psychology and how I am personally managing my risk. Furthermore, subscribe to this channel and to the SMC Trader, like the video, share it with all of your trading friends. This is gonna do it for today, traders, and thank you all for watching. Until next time.